Hey, if you're tired of getting your all cash offers rejected by motivated sellers, stick around for this interview because we're gonna show you how to create better offers that get accepted at 3 to 5 times the industry average. Hey, it's Josh Harris here with REI Black Book, and in today's interview, I sit down with Matt Theriault to talk about all things creative financing. The reason why we've been talking a lot about creative financing lately is because we've been hearing from our users a lot that they're getting their all cash offers rejected more than they used to in the past. And one of the reasons is because consumers are a lot more educated, but another reason is because a lot of investors are coming in and they're making these creative offers where they can actually go and pay more for the property because they're willing to buy the property on terms. And so during this interview, we talk about different terms that you should be aware of. We talk about how you can introduce the conversation of making a creative offer. Right? Matt talks about why you should never lead with a creative offer. He talks about something that he calls the 3-offer letter of intent. So when you get your all cash offer rejected, which the majority of the time you probably will, you can present this 3-offer letter of intent, which gives the seller options, right? It gives them the ability to accept an offer, and it gives you the ability to make an offer where there might not have been one in the past. We also talk about a new tool that we just released that Matt's been using with a lot of success called the multi-offer generator. And last but certainly not least, we talk about where Matt's finding deals in today's competitive market and how he's turning more of his leads into deals with creative financing. If you're new to this channel, make sure that you hit the subscribe button and the bell icon so you get notified every time we release a new video. And with that, let's get into the interview.
All right. Hello, everybody, and welcome to today's interview. I'm really excited to be talking to Matt Theriault today. Before we jump into the interview, I just wanted to tell you a little bit about Matt. Matt's been a longtime REI Black Book user, and he's also been a longtime investor. He's been doing this for a long time. Matt, I remember listening to your podcast when I first started getting into this whole real estate game. That was probably 2013 or 14, and I think you'd had a podcast at that point for 5-6 years probably. Mm-hmm. Right. Mm-hmm. So been doing this for a long time as an investor and then also as a coach. And Matt's an extremely successful coach, not because he has a ton of students, which he does, but because he has a ton of successful students. And I think coaches should be measured on the success of their students or their players or whatever it is, they're coaching them. And every time I talk to Matt, and I'm sure he's got some new stories for us today, but every time I talk to Matt, he's got a new story about how one of his students is successfully implementing I shouldn't say simple, but the relatively straightforward fundamental strategies that Matt teaches. And that's another thing that I really love about the way Matt talks about and teaches real estate is that he has a way of breaking down these complex strategies and these complex ideas and making them easy to understand. And one of the things we're going to talk about, the majority of what we're going to talk about today is something that's getting a ton of attention and has become really popular recently. And Matt's been doing it for a long time, way before it was quote unquote cool. And that's creative financing or creative deal structuring. And so I've seen Matt present on this a few times. He's talked at some of our boot camps before. And again, he's just got a way of making it easy to understand. Right. And so Matt, first of all, thanks so much for coming on. I appreciate it. And I'm looking forward to this interview.
Sure. Thanks, Josh. I appreciate you having me.
Absolutely. Yeah. So why don't you go ahead and talk about, number one, I remember you talking about, your 3-offer letter of intent and creating these creative deals probably, 3, 4, 5, 6 years ago, back before I heard anybody talking about creative financing. So it's been around for a long time. I think it's gaining a lot of popularity right now because it's almost necessary to understand as an investor, just because there's so many, wholesalers and investors coming in and flooding markets, in putting out these low ball offers. So my first question to you would be why should an investor take the time to learn more about creative financing, creative deal structuring?
Sure. The quick answer is it just opens up a whole new world of possibility. And to kind of comment on what you had mentioned, I have been doing this for a really long time, but I am by no means the originator.
Right.
What's kind of sad right now, and a lot of the old school creative financing, the really good real estate buyers, they're old, they're passing away. and there's just a few of like the rock stars that are left. I mean, we all know Ron LeGrand, but someone that's maybe lesser known who I've learned so much from is a guy named Peter Fortunato. And anyway, so if you ever have the opportunity to catch those old guys, if you see some guy is 70 years old, 80 years old teaching a creative financing class, you should go because I learn something every time I pay attention to them, and thank God for YouTube for a lot of that stuff to be memorialized. But so that was kind of, I mean, when I started investing, I mean, I was making this transition from real estate agent to real estate investor, just because I wanted to really focus on working for profits and working for wealth creation rather than just, trading time for commissions. And I made this transition. I made a huge investment in my education, and thank God I found a really good education right up front. And I just kind of did what they told me to do. And so I found the first deal, and it was essentially a wholesale deal. I didn't even know what wholesaling was. That wasn't like so much of a term back then. But it was a wholesale deal, and I found one right away, and it put I think it put like 60 grand or something like that. No, that's a different deal. It put about 27 grand in my pocket right away. And I was like, oh my gosh, this is fantastic. I didn't have to work nearly as hard. I didn't have to show houses. I didn't have to hold an open house like an agent. And so I was like, okay, I got this. But then it was about 8 or 9 months that I did not do a deal. And I was like, oh my gosh, was that first one just a fluke for me? And I just kept getting these lowball all cash offers rejected. And I was like, gosh, no one is motivated. And I was in Los Angeles. It's a pretty, tough market. But there's a lot of money to be made there as well. But I just wasn't getting people to vibe with me. And I just wasn't finding enough motivation on their end.
Right. Somebody's got to be extremely motivated to take that lowball offer, right?
Yeah, so exactly.
A very small percentage of the seller.
I should say. Totally. And I'm much better at finding those people now. But back then, like, marketing wasn't even a thing. I mean, I didn't even know people did direct mail back then. Like, it was very much a people business, and you're knocking on doors and you're making phone calls. Anyway, I stumbled across this guy that turned out to be a great mentor, and he taught me about this 3-option letter of intent. I think this was in 2008, 2009. And I was like, wow, that's interesting. So what he always had me do was take option number 1 would always be the low ball all cash offer that I was really trying to go for. I'd really try to go for the equity position. But then he'd show me the correlation between price and terms. That, okay, so if they don't take that low ball all cash offer, the low ball part would be essentially represent the price. The all cash would represent the terms, right? So you got the fast cash or the terms, and the low ball price would be the price, of course. But he says you can offer more as long as they'll allow you to pay the rest later. And so I had this new eye-opening epiphany that, wow, okay, so as long as I can control the price or the terms, I can always create a deal out of something. So when you start raising the price, that means, okay, Mr. Seller, the market might allow me to give you some more, but I'd have to give you some now and the rest later. How much do you need right now? And that opened up the door always for the creative financing conversation. And when I say, well, I could give you some more later, that was key, because later can take on a multitude of appearances, right? What later looks like. I mean, it can be, deferred payments. That could be later. It could be, a profit share. It could be interest only payments. It could be principal only payments. It could be escalating payments. It could be escalating interest rates. Like, there's so many different terms and definitions that you can use to create what later looks like. But as long as you focused on the price, the seller was more receptive, because that's all they really cared about, what price they were selling their house for. And
the end price, not necessarily what they're going to get today.
Yeah, exactly.
Right.
So, and there was pride in that. They didn't want to feel like they're being ripped off. They didn't want the neighbors to think they just gave their house away. And, there was just a certain amount of, dignity that they wanted to preserve by getting their price. It's like, no problem. We can always get you your price. It's just we have to define how you're going to get it and when you're going to get it. So that was the beginning. And so I would offer the first option on this 3-option letter of intent was the lowball all cash offer. So they had a reference point. And then number 2, I gave them a little bit more money with some different terms, typically an interest only payment. And then number 3 was a higher payment. Potentially, I'd always try to hit the number that they actually wanted. And then I'd ask for principal only payments. So that was kind of my structure. And it was more of a negotiating tool than anything. Because when you're walking into a motivated seller's house and you try to explain, well, I could take it over subject to, and then I'll give you a down payment here, and then a balloon payment there, and then I'll make some small payments here, and then you can share in the profit. And it's like, that's so much confusion, right?
Yeah. That was one of the questions I actually wrote down as you were talking is, I know that you talk about, at one of our last events, you talked about there's like over 20 different terms. And when I say terms, I mean like terms of the deal, not like a glossary of terms, right? So how do you determine out of the 20 or so different types of terms, what you're going to put on that letter, not to overwhelm them so they have 12 different options? Do you look at what they want today and back into that? Or do you look at the purchase price and back into that? Or how would you recommend people do that?
Right. So the 3-option letter of intent would be like, I go back and forth. I'm always trying for option 1 because I'd rather have the equity. But if I got no on there, I'd be like, okay, well, it started like this. Sorry, Mr. Seller, it doesn't look like the market is going to allow us to both get what we want here. But what I can do is I can prepare this letter of intent, and you'll see that it has 3 different options in how I'm prepared to purchase your property. Take a look. My number's at the bottom. Call me, if something there resonates with you. And then I walk out the door, and I always like want to create some urgency too. I say, oh, by the way, I am looking at another house down the street, and I can't buy them both. But if you get back to me before I make an offer on that one, I should be able to honor what I put on there.
Nice.
Have a nice day. Like and that was it. Right?
I like that little built-in scarcity there.
Yeah. And it was always true. I mean, I was going to buy another house in the next few days. So, I can't, and like I said, I can't buy them all, even though I tried to. So what those structures are, to answer your question, number 2 with this interest only, it was a very just traditional looking stuff. There was nothing in there creative at all. It just says, I can give you this much, I'll give you this price, this much down, and I'll pay you for 10 years, this interest only payment with the balloon payment at the end.
Gotcha.
That was that one. Then number 3 was, I can give you more is your price. I'll give you some more money down, and then I'll just divide the balance up into 200 equal monthly payments. So I just used very basic vocabulary that the average layman person could understand.
Yeah. You're not using industry jargon and things like that, right? Just so everybody can understand.
Totally.
And so it sounds like you would typically have the same 3 offers unless there was some, circumstance that you would need to pull out one of the others, Is
right.
that
So it was more of a negotiating piece, right? And it was more of a tool to allow me to follow up as well. Because I'd call the next day and say, hey, Mr. Seller, I'm looking at this other house. I like it. I'm probably going to make an offer on it. I'd rather buy yours. I left you with that 3-option letter of intent. Can I just ask, which one did you like best? And then just be quiet and let them answer. And what I started to learn was people didn't realize that they actually had a 4th option. They could say, no, get out of here. But they kind of always felt compelled to choose one of the 3. And but it typically looked like, well, I like number 2, but I need a little bit more money down. Or I like number 3, but I don't want to wait that long to get the full payment. And so that's all I was really listening for, because now I get to come in with more of the creative terms, because now they understand the concept.
Gotcha.
Right. And now we could go ahead and define, okay, what do you need? How much more do you need? When do you need it? And then now we could go ahead and incorporate all the various terms.
Okay. That makes a lot of sense. That's really smart, because I also wrote down, how do you open that creative financing conversation? And it sounds like that letter of intent is kind of like your foot in the door. And then you can go deeper, and start to really pull some different levers to get where you want. And that's where the 20 or so different types of terms
totally
come into place, right?
Yep, exactly.
Nice.
And now, so it's evolved to a different way where I don't want to just leave them with a letter and leave every time. So I'll take a few more, swings at the plate. And if we're at an impasse on what the price is, it's like, you know what, the market might allow me to give you a little bit more. I always like to make the market the bad guy. I'm on their side.
Yeah.
I said, the market might allow me to give you more if you could take some now and the rest later, how much do you need right now? So that's like the big question that introduces potential seller financing conversation before even the 3-option letter of intent. But you'll notice that, I mean, that's come over of years of refinement, because I used to say, well, would you consider carrying back the financing?
Yeah.
And then people like, huh? What? Oh, that sounds terrible.
Yep.
Right. But if I could give you some now and the rest later, that's nice, basic English that everybody understands.
Yep.
Right. And that opens up and starts that authentic, creative conversation.
Nice. I love it. So I was recently watching a video, I think you just published on YouTube a few days ago, where you were talking about kind of what's going on in the media today with the housing market. Talked about a lot of different things. Actually, I'll link to it below this video so you guys can check it out, because it's a great video. But one of the things you were talking about was a supply problem. And I think you were talking more about on the retail side. It's a tough time to buy a house as a first-time home buyer. You talked about first-time home buyers, and also, where you kind of see trends going. But one of the things that because I know there's a lot of newer investors that listen to these videos. And the question that's always in their mind, and people have asked me this just because I work in the real estate space, is now a good time to even get into real estate? And I know we're talking about creative financing on this call. And this is a bit of a tangent, but, as you're a newer investor, I know what they're going to, some things that are going to go through their head is, number one, is this a good time to get into real estate? And do I really need to understand this, advanced creative financing strategy as a brand new investor? Like, is that worth my time? So I guess it's a 2-part question. One is, what do you think about getting into real estate right now as a newer investor? And 2, should a newer investor really learn these strategies as they're getting started?
Perfect. So to quickly answer, not beat around the bush, yes, it's a good time. Yes, you need to know the creative structures. Now I'll explain, okay? In case people, I don't want to be the politician, right? That sounds like they're dodging the question or working their way around it. But my answer is definitively yes on both parts. The yes on, is this a good time? If you look at, and you mentioned the supply issue, and that's kind of what news covers. But I think could potentially be a bigger crisis that would drive the housing market and make it potentially one of the best industries you could possibly be in from now and, I don't know, the next 20 years for sure, is the demand crisis, right? So we have this big portion of the population that we know as the millennials. We all love the millennials, right? But there's a lot of them. And right now, the peak age of the millennials is 29 years old. Okay. So that's like the middle part, when that's where the highest, the pop portion of the millennials, the
highest population.
Yeah, exactly.
29.
Right. And so the first time home buyers to average age is 31 years old. So if you look at that, just over the next 24 months to match those two numbers up, there's going to be more demand for that first-time homebuyer house than there's ever been in history of this planet. So the demand is there. And then it doesn't just like fall off a cliff. That demand doesn't stop. It goes on for another 5 or 6 years. And then what most people don't realize in this other generation, it's Gen Z, rarely discussed right now because millennial is kind of the story of the day. Millennials is the biggest generation ever. Globally, it's the biggest generation ever. And so that demand is right on the heels of the millennial demand. So we don't have enough houses for all of those people to live in. And if at the peak of our building in 2005, we were building about 1.5 million new houses a year. If we were to get back to that pace, which we are nowhere close to that pace right now, if we were to get back to that pace, it would still take a decade for the supply to meet the demand. So that's a good business to be in when there's such a significant demand for your product. And that's whether you're flipping properties or that's whether you're buying and holding properties. Because not all of those people are going to be able to buy a house, but they still have to live somewhere. And so that makes it also the rental market, the landlording business, the buy and hold business, a really, really good business. So there's other factors, and I could go deep down this rabbit hole. I did, as you mentioned, I did that like as a 20-minute video on all these different dynamics. But just that alone, if you just focused on supply and demand, and you throw out inflation, which is compelling, you throw out the interest rates, which is compelling, you throw out the fake forbearance crisis, the fake eviction moratorium crisis. And like I said, I don't want to go down that rabbit hole. But if you threw all that in, it's even bigger. It's even more compelling. Like, yes, real estate is the time to be in this business. Okay.
Yeah. So again, I'll link to that video. It was a solid video. And so I'll make sure that we link to that. And then, the second part of that question,
the creative financing, right?
Yep.
Yeah. So people we've experienced, I think, is 24% appreciation nationally over the last year in housing, 24%. So even people that are in somewhat financial trouble, they've all got equity, right? They've got enough equity. And this is what makes it really different right now than 2008, because everyone lost their equity, right? Everything collapsed, but everyone has got it, and they've got it soundly. The household income increased significantly over the last 12 months during COVID. Everyone paid down their debt. Everyone's credit score went up. Like, the people that own houses are in sound positions right now. So creative financing typically works when your seller has a bunch of motivation or no motivation, right? It doesn't kind of work in that middle area. And so from that part, you need to know it, because you're going to find a lot of people with zero motivation. But like the other benefits, like from their end, if they were to carry financing for you, one, they get a nice investment with a nice return that's secured by an actual tangible asset being real estate. They get to defer and spread out the capital gains that they've experienced. So it's a good financial play for a sophisticated investor to go ahead and do financing, even if they're not distressed or in any sort of trouble. Now, the other part of that is, when we look at for motivation, we're always looking for the death and the disease and the divorce and the delinquencies and the displacement and all these D's, right? Those are still happening to people, unfortunately. Life happens to everybody every single day. So we have this on-market place that we can play, which is a tough place to play as a real estate investor right now. But off-market never goes away. Life keeps happening to people, and that still represents 5% of all properties that are sold. And so those people will turn to us as real estate investors for a solution that a real estate agent can't solve or can't solve fast enough. So, and then, if you're just to acquire those, and what the good news is you don't need to really buy as deep of discounts if you understand what's coming in the future, because that equity is going to build really, really quickly. So
yeah, which means that you're going to be, the reality is, again, creative financing is getting more and more popular. There's more and more people teaching it. And there's more and more, people doing it. A lot of our users at REI Black Book, and we built a tool. I didn't even talk about this at the beginning of the call. I meant to, but we built a tool not too long ago called the multi-offer generator that helps you create these, these, they don't necessarily have to be 3 offer letters of intent, but you can create, these offer letters with multiple offers on them. They could have 2, 3, 4 offers on them. And there's also an analyzer that helps you analyze these different deals. And it's got a bunch of the different terms that Matt's talking about built in there. So we saw how popular of a strategy this was getting, because a lot of our users were asking us about it. They were saying, hey, do you have tools that can help us analyze these deals and present these types of offers? I say that for one reason. It's because if you're not learning it, other people in your market are. And Matt said something really important there. You don't have to buy it as deep of a discount, which means if somebody else is willing to present them with a better offer for more money, even if it's, a little deferred, but a better offer for more money, then you're sitting there, as a one-trick pony, and all you have is this lowball offer, which means you have a very, very small percentage of sellers that even fit in that box, or even fit, that are motivated enough to even entertain an offer like that.
Mhm.
So, you know, and another thing, like I said at the very beginning of this, Matt's got a great way of teaching these complex strategies and distilling them down. So even if you're brand new, you can learn them. So I would encourage you to go check out, you know, Matt's YouTube channel. He's got a great channel, tons of videos on there, lots of stuff about creative financing and other strategies. But yeah, I think creative financing is super important simply from a competitive standpoint. You know, if not a lot of people in your market are doing it, that means you're going to be able to make better offers. And if a lot of people in your market are doing it, it means you're at least able to compete at the same level.
You said something just a second ago that a lot of people are teaching it right now, right? I would just ask everybody to exercise some caution because this is all I've ever taught, right?
I'm glad you bring that up. Yeah.
Yes. Wholesaling has just been like, that's plan B for me. I've never really advocated wholesaling as a full-time business. Sometimes it's essential in the beginning because you want to generate some cash quickly, but making a business out of that, you'll never set yourself free. It's a plan B for me just when everything else won't work, but I can still make some money on a deal. But exercise some caution who you're going to learn your creative financing strategies from, because just 6 months ago, most of them were almost exclusively wholesale instructors.
Yep.
And I would really challenge, and I would love to look behind the curtain if I could, of how many of these creative financing deals they've actually done. Right. So just be careful.
Of it's repackaged.
Go ahead.
Yeah. To your point, I mean, I think a lot of it's repackaged and you know, potentially regurgitated. You know, I know Matt's got, we're going to talk about this later on in the interview, but, you know, Matt's got a workshop that he's teaching, depending on when you're watching this, you know, later this week on Saturday. I think the dates, is it August 21st?
August 21st. Yes.
August 21st, 2021. So depending on when you're watching this, if you're watching it, you know, as we published, you can check it out. There's a link below. You can learn all about it at reiblackbook.com/CFM. If you want to learn more about it, it's the Creative Finance Masterclass. And, you know, the reason why, you know, again, we wanted to bring Matt on, and why I love anytime Matt has these types of workshops, we always notify our users about it. Number one, Matt's been using REI Black Book for a long time. So he knows the tool, he teaches around the tool, which obviously we love. He gives us a lot of good feedback, you know, on the tool as well. But he's just been doing it for a long time. He's a great teacher. And most importantly, he's got a lot of students that have also been doing it for a long time, very successfully. And so whenever I've got questions about creative financing, Matt's always the guy that I go to, which I do have a few more questions about creative financing.
Okay, cool.
You know, one of the things that, because as we were releasing the multi-offer generator, you know, questions started popping up in our Facebook group.
By the way, the multi-offer generator, it's such a cool tool. Like, I don't even use my own calculator anymore. So you guys, you know, I gave you a few little tidbits and some suggestions, and you guys just ran with it and you developed something really fantastic. So just wanted to acknowledge you and your team for that. I
appreciate that. I really do. Yeah, it was a lot of work, but I think it's a pretty solid tool, and it's only going to get better. So, you know, if you're out there, you're watching this video and you use it and you've got suggestions, hit us up. You know, the best suggestions comes from people that are using it every day. So, but as we released that tool, we started getting a lot of questions in our Facebook group, and people were asking, you know, one of the big questions was, where do I find these creative finance deals? And I've got my own thoughts on it. I'm not out there every day, you know, putting these creative finance deals together. My assumption would be, and Matt, you can correct me if I'm wrong, but, you know, a lot of times it's just, these are just deals that are coming through your traditional marketing channels that you're going and then just having the conversation like you had. They don't take your initial offer, or maybe you just present them with 3 offer letter intent. What is your, what's your process as leads come in? Are you specifically marketing for creative finance deals? Or do you just put your marketing out as normal, and then based on the response and the conversation, present them with a creative offer?
Yeah. So the famous answer for real estate is always, it depends, right?
Depends, right? Of course.
So you don't need to get these creative deals. You don't need to do any specific creative marketing. because, when you put your marketing out there, regardless of what type it is, you have very little control of what actually comes into you. So it's like a box of chocolates, right? You never know what you're going to get. But they all taste good. You just need to know how and when to consume them, I guess, to stay with that metaphor. So that's the first thing. So don't feel like you have to change up your marketing to start doing this. What you really need to do is just start presenting it. And I'll give you two ways that I am specifically targeting in just a sec. But it's understanding first. One of the big mistakes I see is when people want to do creative financing, they lead with the creative financing offer. And that gets shut down faster than your lowball all cash offer. So understand that the seller only really thinks in price. That's all that they know. They're not watching a YouTube video on how to be a creative seller, right? This is not what they do for a living. So they don't have the jargon. They don't have the awareness. They don't have the understanding that we do as creative buyers. So just always focus on price, okay? And go for the equity, because that's what they understand. And equity, that gives you a lot more opportunities most of the time. If you have a bunch of equity in a deal, you have a lot more options for exit strategies. But when you get to the point where you've reached an impasse and you're not coming to the agreement on that price, then you can go ahead and massage in an alternative approach, whether you use the 3-option letter of intent or you use something off of the multi-offer generator, or whether you just ask the basic question, you know what, the market might allow me to give you some more if you're willing to take some now and the rest later. How much do you need right now? Right. So those are kind of 3 different ways to go in there, but don't lead with that, because you're going to get shut down.
Hey, I hope you're enjoying this interview. I just wanted to take a moment to tell you about a workshop that Matt is hosting this Saturday. So if you're watching this the week of August 16th, he's hosting a workshop this Saturday on August 21st. It's an all-day virtual workshop, and he's going to teach you everything that he knows about creative financing, everything you need to know to build creative financing into your business. If you want to learn more about this workshop, you can go to reiblackbook.com/CFM, or you can click the link below this video. With that, let's get back to the interview.
So to market specifically, there's 2 things that I'm doing right now. One is I'm using the 3-option letter of intent as an actual marketing piece. It's my direct mail piece. So I'll go and I'll pull a list of vacant houses of absentee owners, and I'll send them that, right? And it has a little cover letter understanding their situation, because they're a landlord. They've got a vacant house. It's not cash flowing, right? And so but they probably purchased that property for cash flow. So the letter kind of talks about, hey, I have 2. I'm a landlord. I understand what it's like to have a vacant house when it doesn't cash flow. Would you be open to a solution that would give you a very similar cash flow without ever having to deal with a vacant house again? So it's speaking right to them, and it's proposing creative financing. It's proposing a seller finance thing. It's promoting cash flow, which we know they already want, because that's probably why they bought the property in the first place. Right. So that works really well. And so we get a very targeted list of those types of people. The second thing that I've been doing, and this is where I just got my most recent deal, I'm doing actually a YouTube video on it this very second, is I'll go through wherever I'm holding properties. I hold properties, I think, in 6 different markets right now. And I'm in those 6 markets because I really am confident and like my property managers in those markets. So they get the properties to perform. So I want more properties going to those property managers, because then they perform really well and it's more of a passive income play. But I'll go ahead and I'll look at all the other property manager websites in those markets. And then I'll go look for their little drop-down menu or their little link to where I can go to see what they actually have for rent. What's their rental inventory of that property manager? And so I'll write all of those addresses down, create a little spreadsheet, and then I'll go ahead and skip trace all of those. So now I got the owner's information. I don't have to deal with the property manager. I got the property address. I got the phone number. And now I hit them, like, I call it this trifecta approach, to where I lead by just sending those specific people a ringless voicemail. Just say, hey, this is Matt. I'm in the area. I saw that you had a house that's vacant. That's for rent. I went ahead and I just put this pink envelope. So here's my pink envelopes right here. I put a pink envelope so it stands out in the mail. I put a pink envelope in the mail to you. If you like what you see, my number's on the inside, give me a call. That's it. Okay. So it's casual. It's like, I know who you are. I am in the same area, we're of like kind type thing. So that just plants the seed. And sometimes they call me back right off the bat because the caller ID shows up and I say, what's this all about? Right.
Yep.
So that generates a certain amount of phone calls, not a ton, but it does generate a response. Then the pink envelope shows up and it's got a little letter addressing their situation. Hey, I know what it's like to be a landlord. I know you probably wanted cash flow and now you got a vacant house. It kind of sucks. Would you be open to some sort of solution that would give you that similar cash flow without the headaches of being a landlord and having to deal with a vacant house ever again? Call me. And so that generates a certain number of responses. And then a couple of days later, I go ahead and I fire a text message off to that group saying, hey, did you get my pink letter? And did you like what you see? Give me a call if you want to talk. So it's just very not, I'll buy your house. Are you accepting offers or anything like that? But I'm hitting them in 3 different ways with the ringless voicemail, with the direct mail and the text message. And I've noticed like with a very small list, it maximizes my response rate because people just like to respond how they want to respond. So I hit the same people 3 times in a very short period of time. And so that's where I just got my most recent creative financing deal. And actually, I'm taking this property over subject to seller financing, which is the first time I've ever done this because the person owned the property and had seller financing in place. So he already negotiated seller financing and he's in the military. He's being transferred overseas. And so he just would rather sell it than manage it from overseas. And I said, well, I'll just take over the payments and the maintenance on the property and we can go ahead and we can figure out how we pay the balance. So it's my very first, that's why I'm doing the video on it, because it's my first experience ever after 10 years.
Interesting.
I never got a subject to seller finance deal before, but I ultimately was able to put it together and create an infinite return. And so I'm excited to release this video, but that's very much a lot of the types of stuff that we'll be talking about in this masterclass coming up.
On Saturday. Yeah. Awesome.
Yep.
Yeah. That's one of the things too, I feel like you've always got these interesting creative marketing strategies, and it always, or a lot of times consists of going around and doing a little bit of manual work to build your own list. I know you spoke at one of our boot camps and I'm not sure if you're still doing this, but at one of the last boot camps, you were going and not technically scrubbing Zillow, because a lot of times people think that that's automated, but going and just finding for sale by owners on Zillow, getting the owner's phone number, plugging it into your REI Black Book account, and then sending them a text message. Mm-hmm. So I don't know, number one, are you still doing that?
Yes, absolutely.
Yeah. So that's,
I don't do all the scraping though. I've got
got somebody to do it for you, but yeah. But what that allows you to do is, number one, you've got a list that probably not as many people are hitting because it's harder to get. And you don't have to spend as much on marketing because you don't have all the waste that comes with a traditional list. When you go buy a list of 5,000 or 10,000, names from List Source or something like that. Not to say that doesn't work. That's the type of stuff that's just fundamentals. It's a numbers game. That stuff does work. But a lot of times people will ask like, hey, is there a way that I can, find a list that not as many people have? I mean, driving for dollars is a good way to do it. Doing this virtually where you're going. I mean, that's the first time I've ever heard somebody, go to a property management company, find all the vacancies and then build a list that way. But that's super smart, right? So, think through different strategies like this and then figure out different ways to contact them, right? You can go skip trace them and then pick up the phone and call them, right? You can go find people on Zillow, like Matt was doing before with for sale by owners. Sometimes people will hit, we'll find landlords on there. They'll go hit the rentals on Zillow as well, which is, I guess, a similar strategy as finding the property management companies. There's another advantage to that, not just finding a list that nobody else has.
I think the bigger advantage is now, whether it's a ringless voicemail, whether it's a direct mail piece or a text message or even a phone call, is that now you have another identifying factor that shows that you're different than everyone else.
Yep.
Rather than blasting out a text message to a big giant database, hey, you still accepting cash offers for your house? Which I used to do that all the time, right? But now it's like, hey, I'm in the area. I saw your house on Zillow. are you still accepting cash offers for your house? Right. So obviously I'll send that to the Zillow list. Yep. I can send it to the Craigslist list. I can send it to property management XYZ's list. I saw it on so-and-so's list, and they got a property over there that they're managing for me. This one's right next door. So I can just kind of create something very relatable and something very relevant in my messaging now. And when you do that, you get to dodge all of these, banned keywords and everything when you're sending these messages, and you don't flag the phone companies and everything like that. So it's I don't know, probably said too much now that I'm thinking about it, but now you know of how
I mean, a good
around the regulations.
A good rule of thumb, no pun intended, is when you're sending text messages or emails, you don't type emails typically all with your thumbs, but what would you say to somebody if you were just pulling your phone out and typing the text message with your own two thumbs? If you were standing out in front of their house, right? You wouldn't sound robotic. You would say something like, hey, I was walking my dog and I noticed that your house is vacant, or I noticed that, looks like somebody just moved out. I'm an investor. Would you be interested in an offer? Right.
Totally. Yeah. Way better. It's a little more work, but it's a whole lot more effective.
Yeah. And the reward on the other end is pretty big, right? I mean, one deal can bring in quite a bit of money for you. So the extra work, especially in the beginning, is almost always worth it.
What's funny about the extra work is that it's always been extra work.
Right.
We've just been, over the last few years, we've been spoiled with the technology, and people forgot what type of work it was, right? Because this is what we always used. I mean, before direct mail and text messaging and all this stuff, I was knocking on doors. I was going to RIA meetings and giving presentations with the haves and wants section. Like I had to actually go face to face and leave the house to go do this. And so people got kind of spoiled, and now we're just going back to the good old fashioned way of how we've always done it.
That's how things work. Yep. If it's easy, it will get ruined, right? Because it will get abused. If it's too easy, strike while the iron's hot. Good for you, but it will get abused, and then it will get, banned. Regulations will come in. It'll be harder to use, or it will just become less effective because everyone's doing it. Right.
I think what Gary Vee says, marketers ruin everything.
That's true. That's it. That is true. So one note that I put here was don't lead with the creative financing offer. And that goes back to a question that I had as you were talking earlier is, what is the educational curve that you see when you're talking to sellers? And is that, I guess it probably helps to kind of dumb down the language, so to speak. Yep. But, how much education do you have to give these folks typically for them to feel comfortable with one of these offers?
Yeah. So dumbing down the language is absolutely key. You don't want to come in and start using your jargon like subject to or own or carry back or anything like that. Right. So you want to really dumb, like you're talking to, a fifth grader, and you want to make sure that they understand that is super important. So I think understanding the concepts first of what you're actually able to do and what you want to propose, and understanding the intricacies of that and how it all works as far as a transaction goes. You have to have that understanding. And then once you have that understanding, now it's really easy to dumb down the language. Right. Yep. Something I always use is like when they ask like seller finance, or I was like, well, how does that work? I'm just like, it's kind of like an IOU, and then the IOU is recorded against the house. So like, I have to follow through. Yep. You know what I mean? Just so taking that type of language and inserting that into your conversation is key as far as educating the sellers.
Yeah, I do like the idea of using, metaphors and analogies when you're explaining complex, anything that can be complex, right? If you can relate it to something that people understand, like an IOU, and then bring that into, something like creative financing, where, like you said, it's kind of like an IOU, but if you don't pay the IOU, it's tied to the piece of real estate. Then it makes a lot more sense. So that's just something that has always been, it's a good way to sell. It's a good way to, write copy if you're writing any kind of marketing copy. So I do like that. As you're talking through all this, I mean, obviously to be able to explain it well to a seller, you have to really be able to understand how these different terms work. Right. And so, I want to end this interview, just learn a little bit about the workshop that you've got going on this weekend. And, I want to give you a couple minutes to even pitch it, if you will. And the reason why I want to do that is because, I know a lot of people that are going to watch this, probably most of the people that are going to watch this are REI Black Book users. Mm-hmm. And like I said, a couple of times already, Matt's a longtime REI Black Book user. He's been using the multi-offer generator, which I love. And I want to continue to get feedback from you because we want to keep adding stuff to it and making it even easier to use. But in, your workshop, from what I understand, you'll be doing a little bit demoing of REI Black Book and the multi-offer generator, I believe. I don't want to put words in your mouth. Mm-hmm. And so, selfishly, I want to get as many REI Black Book users in that workshop so they can see, how an investor of your caliber is how you're using the tools and how you think about creative financing and how you teach it. So then they can really understand it and explain it with confidence to their next, sellers. And I think, if you're watching this and you've been investing for any amount of time, I know that you can go back. I think you've got one of your students, Matt, closed an extra like 50 something deals in the video I was watching earlier. Cause he went back to people that told him no, and offered or presented, creative offers, and was able to do a ton of extra deals from people that had previously rejected the low ball offer. So selfishly, I want to get as many people, as many REI Black Book users in this workshop as we can.
Cool. No, I would love to see that. And I've always enjoyed speaking to your audience because I think they're smarter than the average cookies. And they know what they want and they take action. So those are like my favorite people to work with. I just love helping people that want to help themselves. And I always get that vibe when I come out to visit you. And I'm sorry I'm going to miss this one with you guys, but I'll be there again because I think we have some little conflict or something like that. I think it's my birthday. Whatever. Anyway, not important. So this workshop, I'm getting together this week with a small group of investors to discuss everything, creative financing. It's an 8-hour intensive workshop. It's going to be delivered live via Zoom, and you're going to discover and receive everything that you need to become a creative real estate investor to survive and thrive through this COVID-19 crisis and beyond. So part of the agenda we'll go over the creative financing, or the most effective creative financing strategies, from equity sharing to options, seller carryback, to subject to wraps, negotiations. I'm going to make it my intention to fill your investing toolbox with all of the tricks of the trade. And specifically like that one that you just mentioned with Josh, who did this extra 55 deals with just this one little tweak. Corey, who did this. He did a refinance over $1.5 million out because of a one little trick. He did this all in a year. And so those types of things really excite me. So I want to show you all of that. I'm going to show you how to find the creative deals. I kind of covered a few of the things here today with you. Then we're going to go into advanced deal structuring, and we're talking about those 20 creative terms. I'm going to show you how to use those to minimize the amount of money that you need to bring to the closing table, and when you actually need to bring it, if you ever really do need to bring it. Because sometimes you can structure these things where you've made a commitment to bring extra money, but then based on the conditions, you never have to. And so that's been really effective for me. And then how to create these creative offers. And this is where we're going to focus a lot on the multi-offer generator and how to, get your acceptance rate 3 to 5 times above the industry standard using these multi-offer approaches. Then I've got an attorney friend of mine, JJ Childers, and he's going to come in and talk about the anonymous paperwork that you can create. Because when you start building your portfolio of creatively financed real estate, people start to notice. And frankly, what you do and how much you make, it's none of their business. So we're going to show you how to do the paperwork the right way to keep your subject twos a secret, and keep those from prying eyes, and just kind of protect what you've built. And then we'll go over to how to close creative deals, because people get stuck with the paperwork. They get stuck with the transaction coordination at the very end and the logistics. So we got a full solution for that for you. And then we'll go through the deal architecture. And I've got a good friend of mine, Brian. He's coming in. And this is something that's rather new to me just in the last couple of years, where he talks about the deal after the deal. Because there's 3 parts to every deal. You've got the terms of the sale, you've got the terms of the financing, and then you've got the terms of the paperwork. And that terms of the paperwork sounds rather boring. But if you do your paperwork right, there's actually more money in the paperwork than there are in the previous 2. So he's going to show you how to do that. And then the part that's got me most excited in probably just the last 12 months, maybe last 8 months or so, maybe about last 12 months, is I've incorporated this velocity of finance, or the velocity of money concept, into all of my investing and creating my portfolio. And it's basically, I've been able to multiply my ROI by 3 while virtually eliminating my risk. And that's like unheard of. And red flags might be going up. How do you get more ROI and less risk? Well, I can't wait to share this with you because, some very smart people shared this with me about 1.5 years ago, and I've incorporated it, and it's really stood the test of time. So it's going to be live. You're going to be able to ask questions throughout the entire thing, as many as you want. It's going to be recorded. It's going to be worth it, or your money back. So I know you've got a link for them, Josh. Yep. So if they want to read more, there's so much more over there to read. I got a bunch of bonuses. So you can go check out the bonuses, and then you can see the actual agenda and the schedule. So you'll know what time it starts and all that kind of stuff.
Yep. So you can go to reiblackbook.com/CFM to learn more. Is a great short video, which Matt basically just, did a great job of what that video is going to tell you. But, we've had many of our users go to Matt's trainings, and I always hear, great things. Many of our customers have actually come from Matt. I definitely recommend check out the workshop again, reiblackbook.com/CFM. And then Matt, if people want to just check you out, listen to your podcast, we'll link to your podcast, your YouTube channel, but where can people find you online?
Super. So probably YouTube is going to be the best. If you go to epicrei.tv, that will forward right to my channel. And, my assistant just launched a brand new website. So epicrealestate.com. Nice. We haven't had a new website in probably 8 years. So we just stepped into the 2000s with our website, the 21st century. And so we got that as well. So you can go to epicrei.tv or epicrealestate.com, and you'll find everything you need to know about us.
Awesome. Well, hey, Matt, thank you so much. I appreciate your time. And everybody who attends the workshop, I know you guys are going to love it. Matt, looking forward to seeing you back live in person, hopefully at one of our events here, maybe in 2020.
Yes, absolutely. Thanks, Josh. It's always a pleasure. I'll talk to you soon.
All right, I hope you enjoyed that interview with Matt Theriault. I always love sitting down with Matt. He's been doing this for a long time. He's a veteran real estate investor, and he's a veteran coach. He's been coaching real estate investors for over a decade. And as I talked about on the call I think a coach should be judged on the success of their students. And Matt has so many success stories. He's been working with REI Black Book users for over 5 years now. And we always love referring folks to Matt because he does such a good job of breaking down these complex ideas, distilling them down into simple frameworks that you can implement in your business. Like I said before, Matt is hosting a workshop this Saturday. And if you enjoyed this interview, I really think you're gonna love this workshop. If you wanna learn more about it, you can click the link below this video or just go to reiblackbook.com/CFM. Thank you so much for tuning in, and we'll see you in the next video.